partner and financial advisor at Mayflower Advisors, and William Landberg, chairman of Westend Financial. Bill, I want to go to you first. You got to get down to basics. Whenever you're in this much trouble, you got to get down to basics. What are those basics of investing right now?
Well, I think the basics that people and investors have to look at now is where will the money be the safest? We have seen such incredible volatility.
Under your mattress.
Well, perhaps under my mattress, that's a very safe place. But in general, this is not a time to be taking any inordinate and outlying risk. And what we're looking at for our clients is to be only in spaces where our investors have a very high probability of getting not only a return of their capital, but a return on their capital.
And you mentioned some specifics: General Mills, 3M, some of the basic stocks.
Johnson & Johnson. I would look at some of your other restaurant chains that are out there. I would look at McDonald's. The issue with the fast food business is very simple. It's inelastic demand. People must eat, and people are clearly dropping down a notch and will be eating more fast foods.
So that means Yum Brands, it means Burger King.
Yes, Yum Brands, Burger King. I would look at another stock, if they were looking for some upside potential, Sonic Brands, which has a very interesting model. It's not too well known in this part of the country. But let me say the following. We're not big aficionados at Westend Financial of the stock market. We have seen too many people go into the stock market with the expectation that this is a safe place for their money. And if you look at the results this year, regardless of asset class,
well, clearly,
they have been basically eviscerated.
Well, Larry, that brings me to one of the points you make, which is that investors have already assumed the worst case scenario. Have investors actually priced a depression into this market?
You know, David, 50% declines in 10 years for the S&P 500 prices in a pretty dire scenario. And I think we do have a dire scenario. We have a really troubled economy. It's a challenging time. But we believe the market has certainly priced in a significant degree of this pessimism. So we don't want to...
Let me stop you there, Larry. If they have actually...
that's fine.
I mean, the worst case scenario, frankly, is a depression lasting several years, maybe even a decade.
No question.
Has that been priced into the market?
You know, David, if you lose your job, as they say, it's a depression. And, you know, if your neighbor loses his job, it's a recession. And I think we're in an environment where unemployment is going up. And we may not get back to the glory days we saw 2 years ago in terms of easy, free-flowing credit. And perhaps that's what got us in this situation. We may be in an environment of greater frugality. That doesn't mean you can't find opportunities to grow your money. A challenging economic period. Excuse me?
Where specifically?
Oh. Well, David, when we're hearing from clients, let's start because we really need to listen. When we're hearing from clients is they're looking at cash alternatives in this environment that have dropped dramatically in yield. What was a 4% and 5% yield in the fall when this dramatic downturn began is now a 1% and 2% yield for safe, guaranteed money. And if we get any signs of inflation, they know they're going to underperform inflation. So we start looking beyond that, 1 step out on the risk curve, 2 steps out on the risk curve, incrementally putting a toe back in the water, looking for some opportunity. And what we're hearing from clients are they want to look for some more opportunities because they know they're guaranteed not to make their goals and not to achieve their dreams if they stay in cash.
Well, and
so
Bill,
that's where we start. David.
The scary thing, though, is you don't want to lock into anything specifically in an environment where you may see an uptick in inflation over the next couple of years.
Well, I think you will definitely see an uptick in inflation. I don't think there's any debate on that subject. Inflation is one thing and one thing only. It's the expansion of money and credit.
That's right.
Clearly, the government has gone...
Which a lot has been going on.
Right. However, since everybody likes an instantaneous or a linear response, they would like to see some proof of that. Unfortunately, the way inflation works is that it takes some time to work its way through the system. So you probably won't see any material inflation or the increase in prices for 2 to 3 years. However, that's a different question than the question you're asking about in the markets. If investors are looking for long-term returns, and we're not talking about investors going in and out of the market. There are many different types of investors, but for the purpose of this discussion, there are traders and there are long-term players. If you're looking for the long term, I think this is an excellent opportunity because some stocks have been very, very mispriced. They've lost a tremendous amount of their premium, yet their fundamentals, their core earning capability is still intact.
Bill Landberg, Larry Glazer, gentlemen, thank you both.
Thank you,
appreciate it.
Take care.
Well, Congress is blasting AIG.